Imagine watching a basketball game where the rules are completely made up on the fly. A player shoots from half court, the ball swishes through the net, and the referee awards them a purple square. The opposing team responds with a layup, and they earn 17 points. If every single team is allowed to invent their own point system and change the rules whenever they want, keeping score becomes entirely useless. You have absolutely no way to know who is actually winning the game. When you take that exact same chaos and drop it into the business world, you get a highly dangerous practice known as creative accounting. Creative accounting happens when companies twist financial math to produce a specific result. They might hide heavy expenses to make themselves look profitable, or inflate the value of the things they own to appear wealthy. They draw their own lines on the court to ensure they always look like the champions. Without a strict, universal rulebook that forces everyone to measure success the exact same way, the entire financial market breaks down. It becomes an unplayable game where everyday investors are easily tricked into putting their money into losing teams. We prevent chaos with a master rulebook, Generally Accepted Accounting Principles, or GAAP. These mandatory accounting standards dictate how companies report finances. They force companies to do 4 specific things: recognize financial events, measure them in dollars, present information clearly, and disclose details publicly. That last piece, disclosure, is vital. Sometimes the rulebook gives companies a few different approved options for how to handle a specific financial situation. Disclosure means whatever approved strategy a company chooses, they must publicly announce it. They have to tell the audience exactly how they play the game. Take inventory, for example. A store has to count all the product sitting in its warehouse. The rules allow them to calculate the cost of those goods in a few different ways, like counting the newest items first or averaging everything out. By forcing the company to disclose their specific method, investors never have to guess how the final score was calculated. Using consistent accounting rules yearly allows for a historical comparison, tracking a company's past performance to see true growth. Because rules apply to everyone, we can add a rival company to this exact same standardized chart for a direct side-by-side competitor comparison. By combining strict measurements with mandatory disclosures, these standards give investors the tools to track a company's real history and judge them against the competition. So, who writes these rules? In the financial world, the referees are organizations like the Accounting Standards Board and the Ministry of Corporate Affairs. To ensure that no single company can manipulate the system, these rulemakers follow an incredibly rigid 8-step process before any new standard is approved. First, they identify a financial loophole. Next, a dedicated study group sketches a preliminary draft to fix it. In steps 3 and 4, they pass this draft to a network of regulatory bodies, actively testing it against different legal perspectives. Step 5 is transparency. They release an exposure draft directly to the public to show exactly what is planned. For steps 6 and 7, the board collects feedback from investors, then modifies the draft to fix any remaining issues. Finally, in step 8, the refined rule is officially issued. It becomes a mandatory law of the market. This meticulous, wide-open process ensures that every new rule is subjected to heavy public scrutiny. It guarantees that these standards serve the truth, rather than the hidden agenda of any single corporation. Every company's financial report is a highly regulated post-game scorecard. It represents months of work, followed by strict oversight to ensure the numbers are honest. The accounting standards that govern that scorecard act as a shield. They protect everyday people from bad actors who might try to boast about fake numbers or hide their losses in the shadows. You cannot have true corporate transparency unless every player is forced to speak the exact same standardized language of finance. Accounting standards provide the foundation that makes the game of business playable and fair for everyone involved.